The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And I don't know what else you can say about what's going on out here other than we've got the little pullback. As we joined the show already in progress yesterday, I said how I was selling out my long positions and getting ready for a pullback that I thought was probably going to be too big for me to sit through, even in longer-term positions. We are off 9 points in the S&P cash, 2164.01, but I do suspect this is going to be a long, drawn-out, and projected pullback in the market. I'm not going to say that the top is definitely in for the indexes, but there are a lot of weak stocks out there. And you know what? They just need to be taken down. They need to be culled from the herd. We put on our first short position, and it kind of came in almost perfectly in the daily newsletter. This is a very good time for you to test it out. If you've never tested my newsletter, go to TFNN.com and check out newsletters and sign up. But already showing a nice little profit on our first short with the market really not even moving much. Got a few more on my radar. We'll be looking at it. We'll talk more about this short as it develops. But you know, we were talking yesterday, we couldn't even crack 22 billion shares on the New York Consolidated Tape at this time. We've got 2.1 billion shares, so not extremely more volume, but I think it took into 245 or 240 yesterday to crack that 2.1 billion shares. So it tells you just a little bit more of what's going on. But, you know, we like to always meet here at this time.
The following takes place between 2 p.m. and 3 p.m.
And discuss what's going on. We've got a lot of moving stocks, so we'll talk about that. Much more earnings coming out over the next few weeks, so the battle isn't over. But we have a market that is priced for perfection. And my guess is that we've had the easy week in earnings, and we're going to start talking about the tougher weeks in earnings coming up in the rest of the show. But as always, we need to get started with a little bit of history.
That it's all just a little bit of history repeating.
It is nothing but history repeating. On this day in 1933, Wall Street begins to digest the implications of Roosevelt's New Deal, including the Glass-Steagall. I used to call this the Seagull Act. The Glass-Steagall Act, enacted just over 1 month earlier. The Dow Jones Industrial Average suffers its 9th worst daily percentage loss, dropping almost 8% that day. Closed the day at a dismal 88.71. And of course, we're off, 100 points already today. So kind of interesting. Things coming up, and that is the G20 meeting. I found it very interesting that literally no one is talking about this. I had to dig to find out. I kind of tripped over one kind of very buried news story on it. It starts tomorrow. And of course, what happens during these events, a great deal has to do with the currency exchange. They don't want to go up there and stick if they have to, stick a thumb in the eye of the other 19. So people in the G20 will try to play nice, make good at least until these are in. Then you start seeing a lot of action after these meetings, normally that Monday. So I would say, first of all, watch, especially Sunday night, Monday morning, for the dollar. That probably will tell us a lot. Right now, we're just off 20 cents at 97 on the dollar index. Everything really looks like a dollar exchange is the tool that these central bankers are using now when basically interest rates no longer work at all. But that's it. I'm expecting kind of some big movement come Monday when all the dust blows over from this G20 meeting that actually starts tomorrow. Almost untalked about. So the market really, I don't think, is pricing it in if anything big happens at that event. What else do we have out here? That's kind of about it. I don't think there's anything else really in the news to speak up. It's all about earnings these days and the stocks that are moving. So let's get to it kind of early today. We'll get into it. You can certainly give me a call at 877-927-6648. Yeah, we've got our own Seagull Act here in Clearwater. But what else can you say? Certainly interesting to see some of the earnings come out and news push stocks around. Like I said, I pulled the trigger at about 9:40, 9:45 this morning and added to a short on a bounce. It'd been one I've been watching for a while, talking about on this show, but I will leave it to my readers and subscribers who probably got a nice taste this morning. But it's not uncommon to see these kind of moves out here. I continue to not see a great deal of push past this area over the last couple of days. Even one of my subscribers said, you know what, the positions look like they're kind of stuck here. Doesn't look like there's a lot of upside in the market to these. And, you kind of look at it that way. But, I just don't see a great deal. American Express, of course, came out. It's off a bit. Very interesting discussion today on Bloomberg around noon when I was driving around, just happened to turn on the radio, and they're talking about why American Express is probably a little weak or weaker than a lot of people thought. This goes back to the deal where they sold the rights to their customers from Costco to Citibank, and now it's kind of, they probably signed something they shouldn't have signed, and it makes it very hard for them to go after the customers that they may have lost. Over time, they're only thinking that they're going to retain about 15% of those customers as they move to other credit cards. Not a ton of volume yet. Good volume yesterday going into the earnings, but not so much today. But I think we can continue to see a little bit more stuff going on. The big winner for me last year, of course, was Biogen. We had puts on it when this thing fell apart last year. We'll call it, yeah, you can see where it fell apart. We got back in here. I think we bought them out here, in late July when these things fell apart. We'll talk about this and much more after this brief commercial timeout.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Off 11 points on the S&P cash. Of course, you can call me at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den. And I got a couple of IMs, some other stuff. Got lots of stuff to get to. Anyway, if we go back into the way back machine, I really liked this sideways pattern, and we bought puts on it last year. This is when this thing blew off from about $400 to $320 in one day. Actually continued going all the way down to $265 before a meaningful bounce. This actually has two nice big gaps. I suspect we might, if this does not fill this gap, we might have a third gap down, and this may be a giant three-gap play. But we've got to look at this. Now, the question is, why is this thing popping so much today? Earnings were slightly better, but I'm going to say slightly to reduced earnings levels already, probably a little too short. What really pushed Biogen up is the CEO leaving. Wall Street has not liked this gentleman for a while. And I would say about 3/4 of this bounce is the new CEO, but he says he's leaving, but they haven't got a successor yet. So this could drag on for another 6 months or 3 months, who knows. My guess is that why they're pumped that this guy is hitting the road jack, it probably is going to have a lot more to do with earnings in the near future. When we look at IBB out here, you know, you've got what probably would be a problematic candle set up if we closed right here. 1.3 million shares already today, but this is kind of what you're looking for if you draw a line from this April 22nd high, the June 6th high to the high today. You can see three lower highs in the IBB. As we said, this one was probably the weakest sector, and the first one that is going to turn as a sector, I suspect, before the rest of the market really pulls off to any extent. But, can we play around here for a little while? I think the answer is yes. But I think we're going to see a great deal more candles like the one we have kind of today. They try to run it. Everybody gives up. It comes back pretty much to the open. And that's kind of the good sign that just about all the juice is there. They'll run the shorts in the morning, and by the afternoon, there's nothing left. That continues to be the pattern, I think, that will set our top. But a lot of people made a lot of money. They're not going to give up easy. There's still a little money coming in. But my call is probably distribution for a few days before we start any meaningful pullback. And then the meaningful pullback will not be all that much. I think we could get back to 2120 fairly easy, maybe even 2100. And depending on how that goes, we will see. That would look like a false breakout of the top. And if people come back in and buy it again, then it will be a double whammy, a false break out, false break down. And I don't know what else you can say other than that. Other stocks that have been moving quite well today is Domino's. We've been talking about a few stocks that have legitimate breakouts on volume, and Domino's certainly looks like it's gone up there. This thing has had quite a run since the May 4th low, and done fairly well. 116.91 down there on May 4th. And a nice pop out here with volume today. What you wouldn't want is this thing closing below really this gap at about 137, which hopefully would get filled on light volume. And then maybe you got another one more ABC up. I don't think I'd be playing it, but it could be out there. Maybe another stock to play instead of it. eBay, after it split, doing a little bit better. It's got some volume finally to take it back into its post-split from PayPal, which reports after the bell tonight. December 1st, 2015, this was at $29.83, with 16 million shares, 31 million shares so far today. So just about everything you would like to see. So do you see the IBB getting to 285, and would that be a good place to short if I can get over 200-day moving average without any volume? I kind of think that that maybe he got everything he got out of it today. I think that like I said, I think it's the first one to turn down, and that with all the good news, BIBB or BIIB, biotech doing and popping like that, I think that was the time to set the hook on the early stocks. And like I said, I shorted one this morning, not a biotech, but another stock that was about the weakest stock I could find, had a huge fundamental problem. I suspect is going out of business. And I thought it would be the first to turn. It turned fairly quickly. Like I said, it turned by 10 o'clock this morning. But I think that if you think that you're going after the weakest in the herd, like the IBB and what is it, like the XLF. Let's take a look at it, because it was kind of the other one that looked kind of the weakest before. It still does to me. The XLF still out there. It just continued, didn't fall at or drop at any of the 50% or 618 retracement levels as some thought it might, because it was it wasn't a lot of juice in there. But to me, you're probably looking at the first two to turn out here, going to be the XLF and the IBB, and they'll probably give you a good indication that the first part of next week, maybe even Monday morning, we come in and see this thing really starting to move a lot faster down in the IBB and the XLF, and then we'll look at let's look at the XLE too. Those were the ones that looked like they had the most downside to come to. This, like I said earlier in the show, a lot of this just looks like distribution to me. But I would say the energy, biotechs, financials look to me like the first on the move down. General Motors, kind of interesting. Again, it couldn't hold a great deal of its pop today and kind of at the low of the day already, although it had some better earnings out here. I wouldn't short this one, but I do have to say that generally the market is telling you something. The energy was a little bit better up on this leg than most, so it's not doing horribly. Again, not in the 3. Maybe the lower gas prices, lower energy prices will help General Motors out a little bit. I think it's going down. I just don't think it's going down quite enough. Intel, of course, down with volume today. Just matched its December 29th high of 1 million shares with 42 million shares yesterday. We'll talk more about Intel inside and other things. Make sure and give me an email or give me a call, path@tfnn.com, 877-927-6648, or post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Had a question that in whether or not General Motors could make an island top, and the answer is yes. If it, closes or opens up, like 50 cents lower or something this morning, it could. It's just, I don't know. Maybe you get $2 out of this thing if you shorted it. It's just, I don't short stocks to get $2 out of a $30 stock. I would need this thing to drop to 25, and I just don't see anything in this thing to say that the risk reward would be there. Just don't see much in it. That's why I'm saying, the other three sectors we already identified as fairly weak. The energy on that last leg up in General Motors was okay. So why it could fall apart, I could be all wrong. I just stay away, from strength and find the weakest stocks to short. And there are a lot of them out here that are fairly weak. No reason to go and pick on General Motors, which is not a big mover to begin with. Intel Corporation. We talked about this before the break. Had a little bit of a volume high yesterday. Let's go back to this. Hang on just a second. Let me get this back up with today's data. Okay, there we go. Now, you gap down. You've got some decent volume out here. They're going through transitions. They still are. Most of these stocks, I was kind of surprised with Microsoft actually breaking out. Intel really didn't give me any kind of sign that it was ready to break out. Things good, yeah. Was this sell-off overblown? I don't think so. I think you could see this thing go until August, still in this lower trading range. My guess, if this thing's going to break out, it's going to break out in the fall, September or October, as we get nearer to a few things that are going to make their earnings look a lot better that we've talked about in the past. Let's take a quick look at Microsoft as a part of Wintel. Microsoft, again, spiked the high, did with a lot of volume yesterday. It's back in the trading range. There are just a lot of these stocks on earnings that are kind of bouncing up against these highs, doing it with volume and then coming right back into the trading range. There are a handful of legitimate breakouts, but I'd say 3/4 of them are looking a lot more like Microsoft and Intel, getting up to those highs and failing and or pulling back. Microsoft, of course, the better of these two, Intel and Microsoft. The cloud business, very good for Microsoft, but my guess is this thing still comes back around that 54 level. And one of the reasons why I'm not shorting the semis right here, I think they're still the strongest of the bunch. And that could be what you're looking at. Joy Global, I had a nice buyout thing today, and it popped up here at 28.08 for the high today. I don't know if there's much more you can say about it other than that. Bad news all around, including computers going down at Southwest. They are down fairly strong. The big word on Southwest was that they hedged higher fuel prices, and guess what? Prices went lower. So they're paying more than some of the competitors that didn't hedge their bets. And that's pretty much the whole thing. Ticket prices going down a little bit, competition coming up a little bit. Everybody added a little bit in the last 3 to 6 months with supply, a few more planes, and you're back to a commodity business in the airlines. All the volume you would want. Next test is 36.48, which is at June 27th low. What else do we have out here? Qualcomm. Finally starting to see a little bit of volume and money come in from China, but I mean little. I don't know how this actually, I don't know if this justified it. I just suspect because of the setup, everybody and their dog was short this thing, and that becomes problematic again. It bounces right up to where resistance should be, that October 23rd high of 2015 at 61.19 at 10 million shares. It did it with 25 million shares, but guess what? Didn't quite get there, and two, kind of pulls back into this gap. That gap that came down when everything blew up in China last year was 66 million shares. We're into it with 25 million shares. That tells you just about everything that you would want. Now, again, not weak. But you know what? I'm hoping that these start to pull back. On this one, I'd like it to pull back around that $55 level, maybe $55.50 with light volume, and that may be the next chance if the market cooperates, to go long on it and see that it's kind of consolidated its way out. Another buyout is this biotech Repalza. Never could pronounce it right. I've looked it up twice and I can't remember it. This one actually did go over some of its recent highs, the December 7th high of 2015, so not that big a deal. But all the volume in the world and the movement in the world tells you that everybody believes that is coming out. Of course, the guy that continues to tell us the biggest stories on Wall Street is off today. This is not earnings, but it is off on his giant new master plan, which is kind of the plan he had before. So it's off. Volume is up just a little bit. I would have liked this thing to got to 240 because I'm thinking that maybe if we could get a few people off the back of this thing on the short, that it's about ready to make that drive down to 40 bucks. Yes, I said 40 bucks. But you know, this one, everybody's always so short. I still suspect we could get a 1 day or 2 day spike out of this one into 240. I may have to miss this one, but would like to get that 240 one more time. But again, the way the market's moving and everything else, the risk reward is kind of tough on these. Energy wasn't all that bad on the way up, but again, a huge short squeeze in this stock. And every time I look, far too many shorts in it too. So I don't know what else you can say. What else do we have? Union Pacific. This one was probably the most interesting earnings call out today. Down with 4.65 million shares so far. But looking at CSX and some of those others, thinking that maybe you could get a little bit more out of these. Their earnings call was not confident in any shape or fashion. I don't know if that has to do with the mix of freight they carry compared to CSX and Kansas City Southern. Let's take a quick look at them. We're getting ready to go to break anyway. You know, nice move on earnings for CSX. KSU, probably much more like UNP. But these things are up at the top. Looks to me just like a UNP issue. But, juice is a little better. Like I said, this market doesn't look like the wheels are going to fall off, but it does look like it's time to pull back. Anyway, answer some more emails. Give me a call, 877-927-6648. Post a message in the den, and we'll get to it before the end of the show.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back taking a quick look at the market off 10 points in the S&P cash, 2.3 billion shares. So volume picking up a little bit off the very light volume we've had for the last few days. Going to look at a few stocks that are starting to give some signals out here. Wouldn't be short at American Eagle Outfitter, but I certainly wouldn't be long it. I don't short stocks under 30 bucks for the most part. That would be the only reason I would not pull the trigger on American Outfitters. Also, of course, it's back to school season and these things have to do kind of nice, have a nice fall. Normally, it's right after Christmas is a good time to get on these. Doing a little bit better, probably doing a little bit better because some of its competitors went bankrupt. But I think better is relative now that we're up to these levels. You needed to have about 7.1 million shares from the March 21st high at 1713. Got to 1735. But again, you know, the best you had was 3 million shares yesterday. Today, even a little higher back into this, but 1.3 million shares so far, and that is it. Market seems to be very winded at these levels. If we had any kind of real exodus of all this cash that has come into our market, people start taking some money out, I think we could see a souffle. I have no evidence of that, only that the market could be very brittle at this time. Canadian Natural Resources, CNQ, another one up here making triple highs and lighter volume each time. The first one, we go back to April 27th and the Wayback Machine, 4.2 million shares. Spike it on June 8th with 3.8 million shares. So volume off just a little. But of course, we spike it again on June 14th and volume is very light and kind of coming off this top. Again, probably not one of the sectors that I'm going to be focusing on for the biggest part of the pullback, but it could be. Back into the automotive sector, Copart's been hanging up here at the highs. I think they've got earnings coming up, if I'm not mistaken. What is the earnings date here? And no, it's a while, September 20th. So this one may be interesting. Up at highs with no volume, always problematic. I do like that there wasn't a lot more juice back into this high and lighter volume. But again, car parts probably not the most weakest of sectors out here. Retail certainly could be. CST brands, the June 2nd high, this thing had all the volume and movement in the world. 45.28 with 5.6 million shares. We're over here now with what, 400,000 shares yesterday, 200,000 shares today. I could see this thing coming back to $38 over time. But again, I think that there's weaker sisters out here in the market. One of those would be Decker's Outdoor. This one looks like it could be some fairly weak for the retail space, and maybe even weak enough for me to pull the trigger, even though it isn't one of my targeted sectors. You had a nice, real, huge move with energy from February 5th up to the March 21st high, pulled all the way back to the May 25th low, and it's been on a rocket ship all the way. But what we needed to start seeing is volume approaching that 1.8 million share high day. What we got as it cracked it, 428,000 shares, so 25%. It's just kind of gone sideways since then. My first target on this thing would be this gap around $55 if I was playing that. And that's not bad. What do you got? $8.5. Just need some kind of sign out here that the market has topped. What else do we have? Let's say, yeah, okay. USO double bottom. Okay. Netflix. Let's take a quick look at that. I have an NFLX. Maybe we haven't really brought that up other than the fact that they're pretty bad movies lately. See if we can't get a little bit more out here. I mean, you've had all the high volume gap down. Unfortunately, as we've talked about before, you get what James Wyckoff said was a selling climax, and that is just all the volume comes in at once. You know, you were basically looking at 13 and 20 million share lows you didn't want to have break. You probably didn't want to go down there and tag it with more than about, 30, 35 million shares. Let it bounce a little, and then the next time down it comes through and breaks down. This pattern tends to be a whole lot of going sideways, and you do have kind of a big move down here, but things would probably, the market would have to probably roll over, I suspect, to bust that 84 here in the next few days. Just a lot of people probably thinking about picking it up. Dolby Labs, another one out here that looks like it's got kind of a very interesting pattern from 2.1 million shares on April 28th at 48.70 to a little higher on June 23rd with 840,000 shares to, of course, the July 12th high, 410,000 shares, and now just kind of drifting off here sideways on lighter volume. Now let's check on earnings on that. July 27th. So that was the reason why. We got 1 week turn earnings on that. Could it hold up, or at least hold up well enough to be a pain? The answer is yes. For-profit education, one of these stocks that you wanted to see break out with volume. If you're a believer in EDU, 43.58 was the May 31st high with, what is that? That right? 13 million shares. Got into it yesterday with 3.8 million shares, kind of holding up here. As long as it holds above 43.58, kind of interesting. If it would close below it, I'm looking at some of these moves as nothing but short squeezes right before the market rolls on some of these. For-profit education is always in my bag of short sell stocks. Don't know anything about this one, Glaukos Corporation. Let's find out about that. Its profile. Out here, let's see what this one has to do. Medical technology company develops, commercializes products designed for the treatment of glaucoma. Well, that makes sense. I don't know the Glaukos Corporation makes so much sense. It makes me think that maybe it's a Greek container ship company. But it could be an eye company, glaucoma. This is right up to its previous highs. Very light volume on this one. So not a great deal on it, but a little bit of a movement and news out on it today. In the semiconductor space, some light volume as we look at Maxim Integrated Products. June 3rd, 2.9 million shares at 38.35. Got to it to the penny yesterday, 38.35. But 1.9 million shares yesterday into that 2.9 million shares today, 1.5 million shares. So maybe the same volume on the downside to this one. But again, semis are not on my high list of shorting. We'll be back after this break.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we've got a request from Richard in Valrico, Florida. And wants to know about earnings tonight. I hadn't really gone through them, but let's go through them as quickly as we can in the last few minutes. Advanced Micro, this thing has been running mostly not on the traditional processor business, but on a just that NVIDIA is moving so well, and it's kind of getting a little bit of love with it. And did it come out already today? May have. I showed it for after the bell tonight. I'll have to take a look. CMG, this thing's been going sideways for a while. A lot of shorts on this thing. Watch out. if they even have the hint or whiff that a bottom is in. Capital One, one of the ones out here that I think is probably very susceptible to some bad earnings news, although I'm not making a prediction. The retracement on this does come up about where, just the 618, and it's kind of come back down to that so far. So, it's just not a lot of juice out here, but yeah, this thing fails, it's going down to 58.03. If it does well, it maybe goes up $5 in the next week or so. So to me, $10 or $11 down, $4 up. That's kind of the risk reward in most of these stocks right now. Flextronics, the electronic assembler, up on light volume today. Lots of volume as it hit its previous June 23rd high going into earnings after the bell. We talked about Maxim just a little earlier. Yes, it is coming out after the bell. We also have Starbucks. Starbucks, this thing's just been going sideways for so long, I don't know how you can pick anything out of it. What do we have out here? Same thing for Skechers, although I would be watching for some good news in Skechers because this thing has been in a big asymmetrical pattern here for a while, going back to March 4th, with lower highs and higher lows. And this thing could be loaded if someone gets on the wrong side of this. Hang on, want to look real quick at SKX. Short interest has not been, they haven't been piling in on this one. In fact, just 7% of the shares yesterday were initiated with shorts, which is pretty nice. The day before was 11%. But a lot of times when people are hopping on these things, it's 20, 25%. You have to go back to the 29th of June to see any kind of heavy shorting in this thing. So maybe that's telling you a little bit about that one. Schlumberger, again, this is one that I think to the downside when earnings come out after the bell tonight. I don't know how much. I don't think that much. I think you could easily wait and look through the earnings and then see this thing even tick down a little bit. But I'm thinking that these have a lot of opportunity to come back down over time, back to its long-term low, which is at $59.60 low as energy prices continue to head lower. We got time for the last one, and that is Skyworks Solution. This one has been coming back to this gap down that happened on the 29th of April. That happened on 8.6 million shares. We're into earnings with 3.4 million shares, so volume not what you would want, but of course it's earnings after the bell. I'm thinking sideways on this. I don't think things have gotten a lot worse in cell phones, but it had gotten a lot better. Sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time. Hold on for Tom O'Brien for the next 2 hours and calling all these earnings.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.